All right, let's get into it. Today, we're taking a look at Smith & Wesson's latest earnings call. And wow, was it a strange one. You look at the headline numbers, and it seems like they knocked it out of the park. But the market, it basically just shrugged. So what's really going on here?
So, yeah, that's the big question, right? You've got this solid earnings beat, so why did the stock barely even twitch? It's a real head-scratcher. They beat on revenue, they beat on earnings, but the stock, it just went nowhere. We've got to figure out what the market is seeing that isn't in those big, splashy headline numbers.
Let's start with the good stuff, because there was some. Revenue came in with a pretty significant beat. We're talking more than 7.5% above what analysts were expecting. On any normal day, a beat like that gets investors excited. That's a solid win.
And it wasn't just a top-line story either. The bottom line looked pretty good too. Now, they still posted a loss, but it was 3 cents better than the loss everyone was braced for. So again, another checkmark in the win column.
So you've got a beat on revenue, a beat on earnings, and what happened? Pretty much nothing. The stock moved up a measly 0.5%. That is, well, it's just bizarre. The options market was betting on a big 9% swing, and instead we got this. This is where the story gets really interesting.
And this table really lays it all out, doesn't it? You see the official numbers versus what was expected, and it looks great. But the market's reaction tells you there's something else going on under the hood. So let's pop that hood and see what's really driving this thing.
Okay, so what we really got here is a tale of two segments. The overall numbers are hiding a massive tug-of-war happening inside the company's product lines.
It really boils down to this. Handguns were on fire, just absolutely crushing it. But at the same time, long guns were, well, they were a total disaster. And that huge split explains everything about why investors are so hesitant right now.
And just look at these numbers. This is insane. Handgun shipments shot up 35%. Think about that for a second. The entire market for handguns actually went down a little bit, by about 2.5%. So for Smith & Wesson to grow that much, that's not just growth. That is them absolutely stealing market share from their competitors, pure and simple. But then you flip over to the long gun side, and oof, it's the complete opposite story. Shipments just plummeted, down almost 30%. And yeah, the market for long guns was weak, but it was only down about 8%. So they underperformed their market in a huge way. All that incredible work they did on the handgun side, it was pretty much wiped out by this.
So this brings us to the real conflict at the heart of this earnings report. It's this battle between innovation, which is driving those handgun sales, and some serious pressure on their profit margins.
Now, if you listen to the CEO, Mark Smith, the message is really simple. Our new products are a huge hit. He's pointing to their innovation pipeline as the reason they're grabbing all that market share in handguns. And he's got a point.
And the data really does back him up here. Take a look at this. New products made up more than 37% of their sales this quarter. That's huge. It means that over a third of their revenue is coming from stuff they just recently launched. That really does show their R&D is paying off.
But, and this is the big but that the market is focused on, look at that gross margin. Just under 26%. Despite all those great new product sales, their profitability is getting squeezed. This is the number that scared investors. This is why the stock didn't pop.
So what's going on with the margins? Well, a big piece of the puzzle is something they call tariff drag. What is that? Basically, it's a tax on the imported steel they use to make their products. And it's not a small number. It's actively dragging down their profitability.
And look, this tariff issue isn't their only problem. It's like a perfect storm of headwinds. On top of the tariffs, you've got a market where everyone is running promotions and cutting prices. Their factories aren't running at full tilt, which hurts efficiency. And to top it all off, the average price they're getting for their guns dropped over 6% just from the last quarter. It's just a lot of things going wrong for profitability all at once.
All right, so that's the story of this past quarter. But the market always looks forward, right? So, what did management say about the future? Let's dig into their guidance and what we should be watching for next.
So the outlook for the next quarter is, let's just say, cautious. They do expect sales to pick up from where they are now, which is normal for the season, but, and it's another big but, sales are still going to be down year over year. Margins aren't getting any better, they'll be stuck at these low levels. And their expenses are actually going to jump by about 20%. Not exactly a recipe for a breakout quarter.
It's not all doom and gloom, though. They're making some big, long-term plays. One of the most interesting is the relaunch of the Smith Wesson Academy. Think of it as a huge investment in their brand and in connecting with their customers. They're building this state-of-the-art facility, and it's a clear move to really strengthen their reputation as a top-tier name in the industry.
So, as we look out over the next few months, here's what's on our radar. First, the holiday season. That's always huge. Then, we're watching for new product launches, especially their new 1854 platform. And then there's the really big wild card, suppressors. There's a rule change happening in January that could open up a brand new market for them. That one could be a real game changer.
So, let's put it all together. Here's the official Talk Ticker's take on what happens next.
We think things are going to play out pretty much like management guided. The big story is still going to be those squeezed margins. And because of that, we see the stock staying stuck in a range for a while. The market needs to see real, hard evidence that profitability is turning around. Until then, we're giving it a market perform rating.
And really, it all boils down to one single question. Can their amazing innovation finally start to win the war against all this margin pressure? They've shown they can design cool products that people want to buy. The next step, and it's the most important one, is proving they can make real money doing it and convince a very skeptical Wall Street.
And of course, a quick reminder, this is not financial advice.